Welcome, everyone. Just to introduce myself, I'm Ella Komlavi. I am a senior associate at Chestnut Run Capital Partners, and it is my privilege to be your host today on this podcast. Just quickly, if you filled up your gas tank earlier this week or even this morning, you know what's happening. I think a gallon of gas, and here in Boston, it hit $4.40, nearly, I think, 50% up from last year. And that's driven by a lot of the macroeconomic factors, the geopolitical forces. But the good news is the global investment in energy transition hit over $2.3 trillion last year in 2025.
It's awesome.
Despite that momentum, there's still a big and huge gap that needs to be filled. That's why we're here today to discuss how three amazing leaders from diverse backgrounds, perspectives came together to make this happen. So it is truly an honor and a privilege for me to introduce these leaders. Su Sanni, who is the co-founder and CEO of Dollaride. Su grew up in East New York, Brooklyn, where getting to school was really hard. He had to walk for over a mile before reaching the nearest subway. His uncles were among the early pioneers of New York's dollar van industry. They're Nigerian immigrants who built from the ground up. Dollaride started as a digital platform for dollar vans and evolved into a B2B fleet electrification company, winning over $10 million from NYSERDA. Congratulations, Su, to electrify dollar vans across Brooklyn, Queens, and the Bronx. Then we have Yeng Felipe Butler, who is the founding and managing partner and CEO of Chestnut Run Capital Partners. Yeng built the firm around a key thesis, which is lower middle market companies are doing meaningful work across the energy transition, healthcare, and education, but they're still underserved by traditional capital partner providers. And her background spans, Harvard Kennedy School, microfinance, institutional asset management, a career that was built around, increasing the access to capital when it needs to go. And last but not least, we have Jon Stafford, Chief Commercial Officer of Zeti North America. Jon spent over 2 decades in fleet management, overseeing deployment of hundreds of thousands of commercial vehicles across North America, including, some of the largest fleets across LeasePlan, Amazon, Novartis, and McDonald's. And that experience now drives, his work at Zeti, helping transition to the EV fleet space, and then being able to have real-time impact measurement across the platform that they're developing and growing at scale. So wonderful to have all of you and excited for our conversation. We'll go back to your backgrounds, your experiences that shape who you are today and the work you're doing. So starting with Su, your uncles built dollar van businesses back in the 80s. You saw the challenge that was happening, and how did those two words collide, and when did that click happen for you?
Sure. I like to think of myself now as the next generation of the family business. In the 90s, when I was, 10-ish years old, I thought it was really fascinating that my uncles always had lots of dollar bills on them. As a dollar van driver, especially in the 90s, everything was cash-based. A driver owns his own van or minibus, and he drives along fixed routes in Brooklyn, Queens, or the Bronx, picking up and dropping off passengers for $1. My uncles and other people around New York City started these companies because there were a series of MTA strikes in the 80s and throughout the early 90s. There were many, right? So that created an opportunity for local people to solve a problem by transporting their neighbors to the nearest subway or station, wherever they could finally get into public transit. And that turned into a consistent business model that they were able to build their families' lifestyles on and build into an industry. I interned with my uncles and started to really learn the business from the back office, as well as riding along with them and other drivers. That really just kind of shaped my mind on what it means to build a small business that also serves your community. And it just made me really look up to them and other people like them.
I love that thread around community entrepreneurship. And I think Yeng shares so much of that from her background, and also growing up in New York.
Yes.
In the Queens, it was?
That's exactly right.
So how much of your conviction for the work you're doing today comes from that experience and that background?
Well, I'll just start by saying that I think the affinity and the collaboration that we ended up all doing in the Dollaride investment was both personal and practical for me. We moved from the Philippines. I was age 10. We landed in Queens Village, New York. I was around the same age as you were when we did that. I was about, middle school age or so. I remember very distinctly having to go to Manhattan in order to get to SSAT prep classes in order to apply to high schools, whether they be in Manhattan or elsewhere. I was 11, 12 years old. My parents were completely allowing me to take public transport or walk. It was an hour and a half one way, and I did it 3 times a week after I got out of school.
Wow.
When I heard what Dollaride was doing, I knew personally that gap that needed to be filled. And I had no idea that the dollar van rides were actually in existence back then. It all just made sense to me. So that's the personal piece. The practical one, I spent a little bit of time in Western Samoa after 10 years of working at my first job at Merrill Lynch, volunteering at a microfinance organization, working with women who were starting businesses, small businesses. And we were making loans to them, small loans, $50 at a time for them to start a pancake eatery or a corner store, very small loans that really changed the whole trajectory for their entire family. And that was really when I saw the power of capital going to certain areas where it needed to be. And by the way, it was 99% repayment rate.
Wow.
Which is incredible, right? They were able to send their kids to school. They were able to put food on the table. It was multi-generational, the impact. And so ever since then, it's kind of planted the seed of how can I actually apply that concept in much larger scale in areas that really matter, in my view, right? The way that I define it today, after 30 years of working in very, very large asset management institutions.
Wow. That is so powerful. And that also reminds me about one conversation we had when we first met during my interview around, being born and raised in Togo in West Africa and my mom being a small business owner. That's how she, financed our education. She's the reason I'm here today. And without access to, that microfinance capital, she wouldn't have done it. And that's also my why, my passion for financing the underserved communities and having an impact and having worked at the World Bank as well in emerging markets and seeing on the ground, how capital can transform communities and economies globally. It means a lot. And that's why I'm at Chestnut Run as well. So really excited. Jon, you spent 2 decades deploying commercial vehicles at scale, and now you're working to transition that fleet off of fossil fuels. What shifted and what does those large scale EV programs teach you about what the transition actually means?
Yeah. Well, one, amazing stories. Yeng and I did dinner last night, and one of the great things about being able to track emissions on the ground is we were looking at some of the areas that the vans that are deployed today are impacting, and they are the communities that you guys grew up in. So it's so amazing to actually be able to bring it full circle. When I started in fleet management, I was out of college. I went to Enterprise, and they were a rental car company. And this concept of mobility was just coming into place. So I was a founding member of our Mid-Atlantic office. And really our goal was to help small family-owned regional businesses to acquire capital, especially in really capital-intense industries like, HVAC or plumbing, where they need a van for every single driver to get out there. And it was really difficult for these companies to acquire capital. They would max out their lines of credit with their bank and not have operational capital run and grow their businesses. So really where enterprise fleet management came in was to be able to go out there, help those operators understand that they could keep their line of credit with their bank for their operations, for their businesses, for their growth, for their payroll, and take this huge chunk of debt that they were using and financing it for their vehicles in an asset-backed securitized way. In order to do that, we had to get smart about those assets. So one of the great things about Enterprise is they had millions of vehicles, so we really understood how the operating costs work, when was the right time to buy and sell and how to manage that process. And, we really pioneered the concept of total cost of ownership. And that's really as we started to scale. I think we were at 30, 40,000 cars when I came into Enterprise Fleet Management. When I left, I think we had 600,000. But it was really sitting down with business owners, with CFOs, and helping them understand, where there's those operational costs start crossing over with the CapEx costs and helping them make better decisions about securing vehicles from factory ordering with big discounts like the big companies did, as opposed to going and getting them at stock dealer purchases and paying $5,000 markups and not understanding the rates and really bringing transparency into the market. So had the opportunity to do that for a number of years in a regional CFO, COO role, and then was able to transition on the flip side of it to LeasePlan, where we were in 34 countries, and really our niche was the largest global fleets in the world. So had the opportunity and privilege to really learn from some of the really savvy businesses of how sophisticated they were with this process and how they really turned these things that were huge costs to their businesses to be cost neutral at times by getting the right buys from manufacturers and selling them at the right time, really minimizing that depreciation impact. So it was really cool. In 2020, I was asked to lead the United States commercial team for LeasePlan. We managed, a large number of fleets and really the Fortune 100, 500 global fleets. But in 2020, my entire perspective changed. I can remember we closed down the world and the cars came off the streets. You would see LA, all of a sudden the smog was gone. And it felt like it was within inside of days or weeks. And how quickly, this transportation impact of, CO2 and emissions is solvable. As we moved into 2020 and 2021, Europe, I think, is still, leading the way in the world when it comes to sustainable transportation and energy. Is the United States really started to take off. And I give a lot of credit to Tesla. I think they created a really cool, fun vehicle that people were excited about. No one was really excited about a Prius, but I think being able to mass produce an electric vehicle that really got interest from the market. Through those years, we were able to work with companies to deploy, really the first large-scale electric vehicle programs in the United States. We worked with Amazon to deploy their, 15,000 last mile delivery vehicles. We worked with Novartis Pharmaceuticals, where we did huge fleets of Teslas for their sales team. We worked with Ecolab, with CBRE, and really started to see that no, there's not an answer for every single application, but there is absolutely good use cases where we can get these vehicles in today. And I mean, that was 5 or 6 years ago. There used to be 5 or 6 real vehicles out there. Now there's 100. I think what I've really grown passion for is finding those use cases that make sense, not only helping companies to make smart financial decisions around how they're managing their vehicles, but also really integrating all the data that's available. I can remember first, working with Geotab as a partner 15 years ago, where you couldn't get assets off a vehicle. You couldn't get mileage. You didn't know usage patterns. Believe it or not, we would get mileage from fuel cards. Drivers would go and fill up their fuel and they'd punch in their miles. And as you can imagine, that was fraught with mistypes and errors. But we're in a place in the world now that, the S-curve has just been so deep where, the assets, Sue, that you and your team are running, we know real time exactly how many miles they're running a day, really understand utilization, understand how to maximize those assets, ideally how to finance them in a sophisticated way, really drive those cost savings down to the operators that are using those assets to impact their communities. And been over at Zeti for about 3 years. And the exciting part is not just helping those companies, but also looking at, your lineage. I always joke, I've put hundreds of thousands of internal combustion engine cars on the road, but my mission is to help get those cars off the road and really make a more sustainable future, for us, for our kids, and for the next generations.
Thank you, Jon. That is beautiful, and I think it brings us back to the macro context, gas prices. But the policy picture is a bit more complicated, right? Especially here in the U.S., the federal incentives roll back. I know you mentioned the EVs already win on a total cost of ownership without federal support. Can you get a bit deeper on that topic?
I think it's all really changed. I think a good part of what's happened is just the vehicles are getting significantly more efficient. I mean, it used to be we're hoping to get 40 or 50 miles out of it. Now you can get 300 miles. We're now having enough mass production where we're seeing those price points come down. We're seeing, used car markets for the first time in the United States have electric vehicles. You've got hundreds of thousands of these assets coming off lease, and they are amazing buys for operators. We work every day with people who are supporting Uber drivers, Lyft drivers, last mile delivery. And there's so many great use cases today where these assets are really able to drive down the cost. I mean, when you look at a total cost of ownership, you've got depreciation and fuel as your 2 largest expenses. I've been in an electric vehicle since 2020. When you said, what's the price of fuel? I honestly don't know. Now if I'm going to a gas station, it's to get a pack of gum. And when you look at the West Coast, when you're seeing fuel prices at $6, $7, we're now at a place where we don't need federal incentives to make those things work. where I've been really impressed, and I think, Sue, you've done an amazing job, is I think we have some states and some markets that are really committed to climate change and sustainable transportation, from leveraging partnerships with New York through getting not only federal money when it's available, but state money, local money. I think that's really the key to unlocking this as we move forward. Is I think there's some really great regional markets that are committed and driven to driving this forward, and love to be able to partner with somebody in New York who's really making that happen. But would love to hear how did you even get into that space to know, like, hey, I can go get support from the state?
Firstly, being an insomniac, I spent a lot of time online researching about the industry and trying to understand the capital landscape. My team and I realized that in order to build a portfolio of clean transportation assets, we're going to need a very strong capital stack. I think back in 2021, when we first went out to market with this idea, we learned that the interest rates from traditional debt were relatively high. That's what made us more open to partnering with government or working with philanthropists to essentially build a diverse capital stack that would have a lower cost of capital, but also some features that would make it more flexible and easier for us to provide an affordable vehicle financing solution to our own customers. Specifically with NYSERDA, New York State Energy Research Development Authority, they are an agency that consistently invests in clean energy projects all around New York State. They put out an RFP in 2022 called the New York Clean Transportation Prizes. And it was essentially a program to incentivize commercial businesses and startups to get involved in clean energy in a very competitive way with innovative projects. My eyes lit up because I had already spent 3 years building Dollaride. We had a digital platform of over 400 drivers at the time who were all using gas-powered vehicles, but we had some insight into their emissions and the impact that they were making in their communities just by increasing mobility. So we just thought, wow, why don't we take this opportunity to gather the right type of capital or capital stack by partnering with the state to electrify dollar vans. That was really the impetus of the evolution of our company. And since winning the contract and grant with NYSERDA, other partnerships with other agencies around New York City and New York State have now come to fruition. It just took that one seed to expose us to the world and also open our eyes up for bigger and better opportunities.
It was actually a couple of years ago that Sue and I met at a New York Green Bank NYSERDA event. Now I have a privilege of actually working together. I think something that maybe I didn't appreciate back then is, on top of, grants and government money and federal money, is you still need to bring in the right capital partners, especially for a lot of those businesses like yours or, earlier stage businesses. They're not really ready for bank financing, which can be a lot more competitive. And there's this real huge gap that's there. At Zeti, part of really what we do is work with operators like you to understand your business, and then find partners like Yeng who can find those gaps and help to come in and fill some of that capital stack you were talking about.
I don't think that the attention and the attractiveness of this particular investment to Dollaride would have been as strong and as foundational without all of those early wins that you had with NYSERDA and all of the other grants that came in, because it was a proof point in terms of your ability to execute, no matter where the capital was coming from. So by the time that we crossed paths, the three of us, in looking at additional investment to Dollaride and capitalizing it in a real foundational way, all of those early experiences and proof points of execution was seminal in our ability to diligence the transaction. I mean, Ella, you were very much a core part of that team, but that was really what we were looking at in terms of your operating history and your ability to optimize your execution with the capital that you had at that previous time.
Maybe some advice to other entrepreneurs who might be listening in. Lenders and investors are looking at your track record and the things that you've done because it's giving them insight into your ability to execute,
That's
your
right.
ability to find and obtain opportunities to advance the company. Big shout out to the Dollaride team for helping us get there, and hats off to Yeng and your company for believing in us.
Just to take a step back, yes, this is a fantastic, opportunity for collaboration. But to your point, Jon, in terms of this gap of financing in companies that have proven through operating history, through transactions, through execution, and still not having enough providers to pay attention to them as they scale and grow, is really the place that we're focused on addressing that need and that gap in a creative way, because sometimes the capital stack should be a combination of a variety of different types of assets. Sometimes it should be equity, sometimes it should be debt, sometimes a hybrid, and sometimes it could be traditional lenders or more creative and innovative ones like some specialist private lenders out there. That holistic view of your capital stack is so important to recognize and acknowledge very early on in your journey, because you can just get stuck thinking that it's just equity each and every time. It's super expensive over the long run. And we spend a lot of time actually, and I'm sure you do too, Jon, in educating, operators that, you have options. Depending on how far along you are in terms of your execution journey, there are varied routes to scaling up in terms of the financing stack.
Yeah, I think there's a growing disconnect between capital, assets, and the data that's now available from those assets. Even when you have an operation like yourself, Sue, or newer, where you have some track on it, can be really hard for operators to put that together and explain it to a lender to get them excited. We had a strategy session yesterday with the Capital Run team, and I asked, what was one of the main things that made this transaction happen? I think the first thing you said to me is it's transparency to those assets. It's really being able to have a proof point, and what Zeti OS is a pane of glass that all three of us at the same time can be looking at a portal and see utilization numbers, see resale value, impact in the community. But when you pull in that connected vehicle data and all that operational utilization data, and you layer it in on top of the financial data, I think it really helps manage that perceived risk that lenders have.
It's a game changer, Jon. Our job as fiduciaries and investment managers for our investors is to be good fiduciary managers of that risk, right? That transparency to where your assets are actually moving around and you have real-time access to their value is game-changing. So many headlines today across some of our peers, the large incumbents in the space, is a push towards more transparency for their underlying investments and the actual value. Right? This is such a basic concept, but has never really come to full fruition, which is why we were so excited to partner with Zeti in a way that we can show our LPs, our investors, our main job is to manage these risks, and we see it day in, day out. In fact, we probably look at it too much. But this is really game-changing for the industry, frankly.
Yeah, and I think what we've seen as we work with about 50 different lenders here in the United States is when we're bringing, Sue and companies like yours to these lenders, is they have this perceived risk around the assets. They don't understand the resale values. Electric vehicles are still a newer technology in the United States. Being able to really give that transparency where we can look at real time and know that, hey, these vehicles are in an equity position. Here's the loan payoffs are. Hey, these assets are out there. They're not sitting somewhere. They're turning miles. They're generating revenue. What we can do with helping to mitigate that perceived risk is to get better rates for the operators out there to make their businesses pencil out, to help them have that capital to grow their business. I think it's a little disappointing. You look at a lot of these large financial institutions and their legacy platforms were built 50 years ago, 70 years ago. They were never designed to manage the amount of data that's available today. They were never designed to integrate API data at this level. I always made the joke, when I was at LeasePlan and we managed some of the mega fleets, being able to run a total cost of ownership or a holding cost analysis and pull in all this data, we would crash the servers. We would have to run these things on Friday nights because you would get these massive 50,000 line Excel files. When I was interviewing with Zeti and they showed me in real time that we can pull in connected vehicle data through Black Book and have values, like this is going to change the world. It's just getting the right forward-thinking companies that are able to understand where the industry is headed, how important data is, that you really need a platform where you can aggregate, normalize, and visualize that data to help us make better decisions. So I think there's people that are afraid of the cloud-based technology and the AI, and then there's people who are leveraging it on top of having great people. And I think when you combine those two things, we really show what's possible.
Absolutely. And I love the impact measurement piece because at Chestnut Run, we measure impact across 3 different areas. So financial, obviously. We also measure environmental and then the social piece. And the environmental piece is what Zeti platform is allowing us to do, right? We're seeing real-time saving across CO2. We're seeing how many miles were driven across, the clean energy utilization. And then through Su's social component, like we're seeing how this is actually affecting communities. And working with, patients and healthcare. I think this means a lot for all of us here. I would love now to get a bit more understanding around the challenges structuring this. Like Yeng, you mentioned a lot of capital providers are still overlooking this space because they're smaller. And what did that mean for you? And then also Su, on top of the grant funding and the support that you receive from the government, what does this additional capital unlock for you?
At Chestnut Run, we are very clear in terms of the areas that we want to be known to be working in. No one needs another private credit manager that's focused on, direct lending in the middle market. Super crowded space, right? And when we launched the firm, we were really adamant in looking for places that were underserved and uncrowded. This whole area of energy transition, and when we started the firm, a lot of these macro factors weren't in play yet. We just knew that there was this gap that needed to be addressed. And the narrower it is, the better, because there are going to be fewer and fewer players. This particular, collaboration with Dollaride kind of ticked all of those boxes. Of course, there's table stakes due diligence pieces around the financials, needs to all pan out in terms of your ability to pay back the loan. All of those were table stakes. But what really attracted us in terms of the non-quantifiable things as well that impact above and beyond the financials. So, whatever you want to call it, triple bottom line, it's that plus more. Plus also, coming across collaborators and colleagues that are aligned in terms of our values and the things that we want to accomplish. And so meals that we've shared together and in exchanging ideas and notes in terms of, okay, this is this place that you're going to be focused on next at Zeti. How can we be helpful? That connectivity and collaboration, I don't know how to actually quantify that.
Yeah. I think when you can align with people that you're working with on a value perspective, anything's possible. I think that allows you to work through the challenges that happen in these transactions. And, it's also nice when you like the people you work with. I think we all probably do calls every day with people we maybe don't get along with. So it's great when we actually have an opportunity to, build long-term relationships, to align on values. And, I think the future's, wide open for us and, excited to see what you continue to grow in New York.
Yeah.
Sue.
Thank you, Jon. It's really special when you actually like your lenders and investors.
Is that a rarity?
It's very rare. When Chestnut Run visited us in New York City, we spent several hours together. Yeng and I, we've gone out to dinner and have breakfast. But, we spent time actually going into the community with the electric vehicles, driving around and seeing what it's actually like to use these assets, as well as the challenges with charging infrastructure. Mm-hmm. We literally ran into that in real time. And that opened up the conversation to what is the long-term game plan and an opportunity for us to continue working together. There are thousands of vehicles that provide local transportation to seniors, to the youth, between healthcare facilities. And many of these transportation providers are earning money as contractors or subcontractors to the government. The real underlying risk is very low because their payment flows are very, very stable. But at the end of the day, they're small businesses. We had this level of insight because this is what the dollar vans fundamentally are. The capital from NYSERDA and now Chestnut Run really gives us the ability to demonstrate how we can return capital while also electrifying these fleets. So I look at this sort of like rungs on a ladder to building up the type of platform that can electrify thousands of these vehicles all around New York City, potentially maybe in other cities as well. We're just getting started, but happy to say we're starting out on the right foot for sure.
So where we're all at today with, capital providers, Su being on the ground as an operator and Zeti having that platform, what would it take to have even more deals? like the one you just closed a few weeks ago? On the policy, on the economics, the capital provider side, the tech side?
Could I start?
Yes. Yes, please.
Basically, it takes lenders and project owners or developers like Dollaride really collaborating closely, figuring out new or more innovative ways of underwriting the deal. Sometimes the real third parties, right, who are our customers, as small business owners, they might not have the more traditional details that would make it easy to underwrite them individually. But in aggregate, and especially when you're using a platform like Zeti, you can see that they have very high utilization of the assets. You can see the value of those assets over time in a way that should give lenders and investors a lot of confidence. But it takes time and a relationship to really do something that's a little bit, untraditional. The second is also really just understanding the opportunity in the market. In New York City alone, there's over $2 billion of transportation assets in this specific market or asset class. 25,000 small transportation providers who are serving non-emergency medical transportation, senior transportation, and the like. And very, very few of them have electric vehicles today. But they all are, right now knocking down our doors because gas prices are super high.
Yeah.
So the opportunity to us is really clear, but it takes a great collaboration like the one that we've started to really seize it and capture it. So that's what I'm looking forward to.
For lenders, we need to have consistent information delivered in a way that is clean. It needs to have consistency for us to actually be able to evaluate. And which is why I think, the work that you all did in presenting Dollaride as a real opportunity for us to be able to lend, it was more than, a third done and curated. So it wasn't that hard for us to just pick up the information and the consistency of the data and take that in our investment process and assess it. So I think that also needs to happen.
Yeah, I'll tackle it twofold, maybe from both of your seats. From my perspective in the market is, for the operators, sometimes it's a challenge for them to get their data put together, the good deal narrative that a lender can look at and understand and want to take a bite of. Shout out to Kevin Egolf on the Zeti team, our head of capital markets. That's a lot of what he does is he's meeting every day with operators, understanding their business, understanding their assets, understanding, how to make that capital stack work for you. And then from Yeng, from your side, we need people like you who are willing to walk away from these high cost legacy systems and manual processes to let go of the fact. Wasn't that hard? Those systems are expensive and that drives up the cost of capital for these operators. We can do these things with technology today with less human beings. We can now leverage platforms like Zeti where we're doing the portfolio management, the portfolio servicing. We now have one pane of glass that you don't need to ask Sue for information around these assets. We are all able to log into one platform, see everything real time, save Sue and his team operational time from having to pull report after month after month, lower that ultimate cost of capital for you that drives down to the operators. To your point, you can still get great returns. We can still be market competitive. We can do it in a way that's much more efficient. Leveraging this data, not being afraid of it, is really how we continue to accelerate and grow in this space.
Oh, that is amazing. And again, congratulations on closing such an exciting and impactful deal across all organizations. Are there any last words that Sue, Yeng, and Jon you would like to share? Anything they have to remember?
There is a lot to do. And there's a lot of room for many players to participate in this space. I'm a capitalist at heart, but I am very open to having peers and competitors in this space because there's really a lot of opportunity.
It takes having a community, but also a vision for the future. I think the three of us have established enough of a rapport that we trust where we're headed, and then we know that we can get there together. For any other lenders or investors that are out there, let's start with the why, as well as what the opportunity really is. And then from there, I think it becomes easier to invest in us as a platform, right? Because we're not just a one-trick pony. There is a huge, huge opportunity out there. So we want to invest in that infrastructure so that we can do multiple projects, multiple deals together.
The world's complex. The world's busy. There's so much to do. It's impossible to be an expert in everything. I think what's really fundamental is finding people that are high integrity, that share your values, finding those partners and leveraging their expertise. I don't know many people who are in roles like ours that aren't happy to respond to a LinkedIn note or to talk to somebody or walk through challenges we've had or how we address them. So it's using your community, using your network, and finding those people that share our why.
Beautiful. Well, what an amazing way to end such an exciting conversation. Thank you all so much, and excited for what's to come.